Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 10th, 2018. I wanted to do a quick market wrap. I did do an update this morning, but that one was for members only because I covered some trade ideas in that video. So that was for members of Right Side of the Chart. But this one will be for the public. I'm just going to cover general market analysis, and there's some, pretty. I still think this is an important week right here. Yeah, I think there's where it's some make or break levels. I'm going to get to that and really drill down to the intraday charts with a quick overview and update on the longer term charts. So we're starting out here with an SPY weekly chart. This is 10 years. This is the current uptrend line, which is broken. I mentioned we're trading well above that uptrend line. But as I said, any one sell signal, any one set of divergences, any trend indicator by itself is not alone, be all end all, be long or short. I take everything together. The more evidence you have, the more check boxes you can click off for the bullish or bearish case, the stronger your case is on a trade. So right now, what's going on? Well, the SPY is, I've mentioned it's traded now for 4 weeks below this trend line here off the early 2016 lows, but it is holding that 40-week exponential moving average, which is the same as a 200-day moving average, the red line. And what you can see is, that has done a pretty good job of defining uptrends and containing pullbacks. Now we've had once in a while you get a brief spike below, but then you snap back up and close the week. So in that case, we had it didn't even close. It looks like we had just a candlestick shadow down there, a tail, followed by a green candle. So it looks like we held support, was intra-week break. But here's the periods of correction. So when you're trading below that level, the trend is bearish. Again, nothing's perfect, a few whipsaws, but these were intra-week whipsaws because I see green candles there. I don't see a red close. So this is what I'm looking at here. Is so far we haven't yet given that level up. You can see we've had a lot of tests on that level, and in the past, since this bull market started, other than the breakdowns of that level, any pullback to that level has proved to be a buying opportunity as it was a few weeks ago. And I pointed that out back at the February lows. So we zoom in today, and what do we see? We see that level. They're fighting for it tooth and nail right now. The bulls are. You can see that every candle, we had a little bit of a red close there. You have to see it go with conviction. When it breaks, you'll know it. You'll see a big red ugly candle. More than likely, you won't see us limp down. You'll see a big red candle. Imagine that's not blue but red, and then a follow up, and then that level's gone. So right now that's holding. And of course, we look at the leading index, or what has been the strongest index, I should say, up until recently is QQQ. And the Qs have come under pressure, obviously, as we all know. There's a lot of unwinding, some issues with the FANG stocks, some of the big tech stocks coming under pressure right now, like Facebook, for example. But you can see the same story. It goes back 10 years, and you can see how well that 40-week moving average has capped most of the pullbacks in the past and told you, well, this is a pretty significant support level, and as long as the market trades above it, it's healthy. And when it cracks below, and it closes below on a weekly basis, moves solidly below, you may want to step aside for a while. And I will say this bull market, I've said it for a long time, is the second longest on record in history. So is the economic expansion. So, all good things must come to an end, and I still maintain or believe that this trend line will go at some point soon. It could go tomorrow, or it could go 3 months from now, or 4 months from now, or sometime later this year. I do think it goes to 2018. I do think we have more downside than what we saw so far at the early February lows. But as of now, that's that. So we're, by that metric, we're still fighting with. Here's another chart of QQQ. And you can also see this trend line here, not this purple one, this white trend line. That defines the move off the 2016 lows as well. And there was a little mini crash in the Qs back here. So here's a well-defined trend line in QQQ, and it's cracked below it. You can see, yes, last week we printed the first weekly close below. However, as of today, and again, it's early in the week, it's only Tuesday, we have 3 more trading sessions to go. Uh, Anything is possible, but this could prove to be a false breakdown in fewer things, I say, are more bullish in trading than a failed breakdown because shorts pile in. Then when they see it doesn't stick, if we regain that trend line, they cover. So take it for what it's worth. So far, we're holding that 200-day slash 40-week moving average. But again, the divergence highs and all that, I can make a bearish case. And I said this in the trading room tonight. I can make a solid bearish case right now, but I've been for the last few days, as you guys know, long and net long and bullish, looking for more upside. Now let's get down to the zoom down to the daily charts. Take a look here real quick. What I see on here, forget about everything up top for now. We've had, of course, that divergent high, which is significant, and it has played out for a correction so far, maybe more to come. But here's what I'm watching. And this will come into play when we get down to the intraday charts here in just a second. What I'm looking at is a very low level. Look how deeply oversold or at such low levels the PPO is, and it's curling up. If we zoom in here, you can see, let's zoom in, you can see the PPO line, which is my preferred momentum indicator over the MACD, especially during periods of large price swings. I think it does a better job. But you can look at the MACD as well. You'll probably see the same thing. These are close cousins, the PPO and the MACD. And you can see that momentum indicator has now curled up. It's pointing up. So number one, that's a very early, possibly premature, but an early sign, a bullish sign that the PPO, that momentum is turned up. And the next sign, and what I'm looking for here, oh, and by the way, the RSI, of course, has moved up as well and is pointing up. So those are two trend indicators on the daily chart that are starting to firm up. And if and when we get a bullish crossover, which will happen possibly this week if we take out the levels I'm about to get to on the intraday charts, and that's why I think it's such a critical level. We'll have a bullish crossover. These bullish and bearish crossovers, just go back in time, do it on your own chart. They mark their, if there was probably one single indicator that you had to use, that I had to use, a trend trade, it would just be, looking at bullish and bearish crossovers on the PPO when you have clean separation. What do I mean by clean separation? Stay away from when the lines are flat, close together, the market's kind of in a low grind or a sideways trading range. But when you see this clean separation, the distance between these lines here, that's when the PPO tends to work better as buy and sell signals, when you have these bearish and bullish crossovers. So let's clean those lines out. And it also works as the PPO line or the signal line works as support and resistance. So for example, we had a bearish crossover there, told you sell signal, get out of the market. We had a bullish crossover here, it said bullish, get in the market. You can see it looked like we were poised to make a bearish crossover, but we didn't. And very often that line, the PPO line, which is the blue line here, will find support on the signal line. So now that can happen here. I want to point that out. That's why we're at a critical level. We could get rejected here on this attempted bullish crossover, but as of now, just like back here, we had a little pullback, but the PPO remained in bullish territory. Told you at least by that one indicator. And guys, let me make it clear. I don't trade off any one indicator. I use a compilation of all these variables go into my analysis. I just said how simple it would be if you had to use any one indicator, but fortunately, we don't. So that's what I'm looking at. And so there it told you, okay, bullish crossover. Bearish crossover. And this bearish crossover came after that scenario I had, highlighted back here, where the markets may go on to make a new divergent high. So we had negative divergence to boot. So this is checkbox number one, negative divergence. Checkbox number two, bearish crossover on the PPO, and that was about as good as you get on a sell signal. Now, what I'm looking at, you can see here, we had some slight divergence here on the RSI. The RSI also, if you look back up in time a little bit, you can see that the RSI, although it didn't technically hit that 30 oversold level down here, that blue line is 30, it came very darn close to doing so. The last time it hit 30 was right here. And obviously you would have wanted to load the boat there. Now again, the longer in the tooth this bull market gets, the greater the odds are that sooner or later a new bear market will start, and then oversold will not be a one and done buying op like it has been in the past. During bull markets, I always say this: oversold readings, they're fleeting. You can get them. They're very, you hit 30, they rarely go much below 30, and boom, off to the races. Just like oversold becomes more oversold and stays oversold in a bull market. Well, the flip thing happens in bear markets. So we'll see. We'll know soon. But right now, I'm still leaning towards the near-term bullish scenario. And just to cover that on SPY as well, here's SPY. You can see on SPY, the daily chart, we have bullish divergence actually on the RSI, which I'm sorry, we don't because we didn't make a new low yet. So to negate that. Never mind. But what we did have, we had an oversold reading here, and we did have an oversold reading there. We hit the RSI. Both times we hit that 30 level. Last time was back here, so there was your opportunity to get in the last time. It hit it here, and although that didn't pan out for much, we didn't go much lower from that point. We hit it here. That was a great buying up. So again, these are things that I'm looking at. You don't want to get aggressively short. If you shorted the highs, and you want to hold on because the longer term outlook is bearish, great. But to short now, coming off oversold levels, not objective in my opinion. And again, we have a mix of trade ideas, and I'm focusing more on the shorts that I do own or individual positions with their own bearish technicals. But most of what my focus has been lately on trading the broad market, particularly the Qs. And what else? So there it is. Here's your crossovers like I talked about. Bearish crossover there. Said get out of the market. Sell signal. That confirmed with that trend line break that I highlighted back here when I put out a post. Sell signals on the U.S. equity markets right there when that trend line broke. I was following it closely on the 60-minute chart. It was confirmed by a not only negative divergence on the 60-minute time frame, which isn't shown here. This is a daily chart, but we had that bearish cross on a clean, what I call a clean bearish crossover. We had clean separation between the lines. And then back here, we had a bullish crossover. So it said, okay, it's time to get back in the water. Time safe to get back in the water. PPO remained above the signal line, tested it here, but it held it successfully, and then finally gave a bearish cross right here shortly after the top. And now again, where I'm going with this is watch this, because what happens this week over in the probably for the remainder of this week, unless we were to trade sideways, we're looking at a bearish crossover. I'm sorry, a potential bullish crossover, or I'm open to anything that happens. A rejection there, and we can go lower. So we haven't crossed yet. It's just a potential pending buy signal, at least on that indicator. All right, back now down to the 60-minute charts. I'm only going to focus on the Qs because that's what I've been trading lately. I've been trading NQ, E-minis. I like them because I can, trade around the clock, have stops to protect me from these big gap ups or downs that we've had lately. Whereas QQQ, you're subject, if there's a big move in the futures, you're going to open up and gap up or down the next day. So that's what I've been focused on lately, and the levels that I've been watching and highlighted many times recently. These are bounce target zones, but this is the big level now, 160, 166. So where I'm going, and this is in response to a post I made in the trading room tonight. Somebody was inquiring about the potential divergences they see forming on the QQQ 60 minutes. So this is what I believe they were referring to. You can see right here, we made a slightly higher high. We made a run at that 160, 166 level today, but failed it. And even if we go higher, even if we take it out tomorrow, you can see that we're still going to have some negative divergence on the 60-minute chart. My thoughts were, and I put a big weighting on, I love the 60-minute. It's my go-to swing trading time frame. If I only had one time frame to trade off on the 60-minute, on for swing trading, I would use the 60-minute chart. But of course, I use that in conjunction with the other time frames because I can, and there's no reason not to. Where I'm going with this is this divergent high, while yes, it is negative divergence, and yes, it could play out most certainly for reversal, especially considering the longer term, the precarious situation we are, below trend on those weekly trend lines, everything. So we could see that a breakdown there and these divergences play out. However, normally, and what I'm looking at here is we're coming off this big, powerful divergent low right here. It says pending bullish crossover. We already got that. That's old notes on my chart. So this was a divergent low right here. This is why I have been bearish. I'm sorry, trying to talk fast to get this out. This is why I have been bullish recently with a bullish bias because of that 60-minute powerful divergent low. And this divergent low was much larger in scope than this potential negative divergent high here. Um, and another factor that I'm looking at, oh, and it comes in close proximity. You usually don't see a big divergent low. These big 60-minute divergent lows like this divergent high here usually play out for big moves, big trends. Just as this divergent low back here played out for a big move, this divergent high played out for a big move. So therefore, although this is possible, that's all we get off that divergent low. I think that this will be overridden, or in other words, these divergences will be burned through, and I'll show you what has to happen for that. That's again, well, here it is. I already said it, 160, 160, 166. I'll get to the futures charts in a second, but you can see boom, boom, boom. This is just what we're tapping on right here, and we still have, some a potential inverse head and shoulders pattern. You can see there. So this is a potentially explosive level. If we take that level out, we could rip. We could run right up here to this 166, 165.66 level. In fact, that would be, my first, and it is my preferred target. I'm leaning towards that scenario. But again, as I like to say, resistance is resistance until and unless broken. So we'll have to see what happens tomorrow with this. But if we do break out, these divergences will probably be taken out, negated, burned through. And I also wanted to mention that the PPO, both the PPO and the PPO signal line, which I use as a trend indicator, are below, or are, I'm sorry, above the zero line, this dotted line. And what that means, if you haven't followed my analysis before, typically when you get a cross, and I like to use the 9 EMA, it's the last of the two. When it crosses below the zero line, that's a sell signal. The trend is bearish. So here the trend was bearish. When it's trading above the zero line, the trend is bullish. And you can see, I'm trying to make a mess of these circle tools, but you can see above or below, bullish, bearish, and just follow, just do it on your own chart. And you'll see that that does a pretty darn good job of defining the intermediate term trend. This is what we're using on a 60-minute chart. So right now, trend is bullish. By this trend indicator, indicators are pointing higher, both on the 60-minute chart as well as the daily time frame, as I told you. We have a potential inverse head and shoulders bottoming pattern. There's a lot of good stuff here. It just needs we need that spark. And that spark will come, as I said, I believe, on a break over, we'll call it the 160, 170-ish area. There's that pattern. We also had, and I covered in the video this morning, we had this downtrend line here. You can see it was taken out. We had a false breakdown there, moved back down on some news-driven headlines or events, but then broke out, made a perfect back test of this, and this is when the video was, actually we gapped up this morning. Yeah, that was today's open, yesterday's close. So yeah, we gapped up, and there it is. So this again is a key level to watch, very well defined, and that's what I'm focusing on right now. Before I leave QQQ, I'll wrap this up with the futures charts for those of you who like to trade futures, and also show you that the futures, they align, that key level aligns on the future NQ E-mini futures with this 161.70-ish level. But I wanted to just point out a few stocks that I'm looking at uh, and some key levels on those. Here's Apple AAPL, the largest component of both the Nasdaq 100 as well as the S&P 500. And look at this level. I mean, look at all of these reactions. We'll start right here. These reactions from below, that was a very significant level. Breakout, back tested it with a little brief move through, but we snapped back above it and held as support. So, when I draw these trend lines, I'm looking at all the former reactions on there, a lot of reactions here. And it's not just Apple. There's a lot of leading QQQ market leading stocks that have this. So like the Qs, we had this divergent low. So why am I bullish again? We had a divergent low that's so far playing out, but we have to take this level out. And this is not by mere coincidence. I promise you that. This level, as well as I'll get to these other ones, they all come together because these are the leading components of QQQ. So we look at Alphabet, GOOGL. Here's Class A shares. You can see right here, same story. You can see a very well-defined former support. It was support here, it broke. Then it acted as resistance on that pullback. It acted as resistance on this pullback here. And it's capped, most importantly, it's capped all the recent advances. So again, if my bullish scenario plays out, we're going to pop these levels and we'll see we'll see a bunch of shorts get squeezed out. We'll see a short squeeze because if I was shorting these components of the QQQs, I'd be shorting up to this bounce back to resistance with a stop place not far above. Let's see, and that there's a couple more. Microsoft, I could draw a line, not as not as well defined, but Amazon. Here's a mega cap here, one of the market leading stocks, and again you can see this very clear level here, well defined. I mean, it's the bottom of this gap right here. Let's try another tool here. Excuse me. It's the bottom of this gap right here. You can see the line right here. There's also reactions all the way on this 60-minute chart going, back into late January. So a well-defined level. So again, this isn't coincidence. This is to me, one of the most important technical levels that we've seen in the last few weeks here. Other than, the QQQs, of course, making that recent double bottom low, which is also something else, to make mention, when we zoom in here. There's just a lot to cover, and I've covered a lot of this in recent posts. And a potential W bottoming pattern. There's a double low right there, takes the shape of this, W pattern here on QQQ. But again, it all comes in at this level here. So, all right, I already showed you some of the market leading stocks. I think I showed you most of those. There's Facebook, broke out of this level today. Intel, Cisco's right there pressing against a downtrend line. Comcast is also one of the top components. Very well-defined downtrend line. We took this one for an official trade recently, just a quick pop, hit our first and only target. But again, if this downtrend line gets taken out, it will also take out, that was a resistance level that I was targeting, which is still resistance. So I like trades like this where you have intersecting, not just one, but two resistance levels. So if Comcast and the market pops tomorrow, it will take out both downtrend line and price resistance and probably just pop right on up. If not to that second potential target, that wasn't the official target. There's a level right there. I'd say $36 is almost a done deal if Comcast can pop above that level. And then finally, one more I wanted to show you. Nvidia just broke out of this bullish falling wedge pattern on the 60-minute chart. So, this is why I'm still leaning towards a bullish scenario and open to anything because if we get rejected off those levels, then that's that. All right, we'll wrap it up here with the futures. Let's see, I've got NQ here. These are the E-minis. This is the same chart I covered this morning in this morning's video. You can see a nice downtrend line on the NQ. These are the Nasdaq 100 E-mini futures. Just like QQQ, we had a little false break, a little whipsaw breakout, fell back down below. That should have circled right here. But then we broke out, and so far so good. We broke out above that downtrend line. We came in, made a perfect back test right here, and went up. And this is a level. I know it might be hard to see on this YouTube video. I have the numbers pretty small in this chart. These are the June contracts. These are the ones I'm trading. So this is a little bit different level, which I'll get to in a second, than the continuous contracts. So I'm showing 66.54 is my level. Right there it says 66.53.98. So we'll call that 66.54. That is the comparable level that I showed you on QQQ. That is what the futures need to take out. And if and when they do, you can see it's all, at least to me, it's pretty much blue sky up to at least this level here. There's a target zone there for the NQs. And then finally, we'll take a look at, I also covered this chart this morning. These are the continuous contracts, so the levels are a little bit different, but you can see same story. Most important thing is you had this divergent low like you did on the Qs. You had that little whipsaw breakout signal, whipsaw failed breakout right there with a move back down, but then the real deal, we broke out so far, back tested, successful back test, we moved up. But you can see the line. I've colored it blue here. There's the number 6652 on these the continuous contracts there. So, give or take, within a couple basis points of each other. So those are the levels that the NQ E-minis need to take out, and if they do, again, looks pretty clear to me up to about 68.44, possibly 69.19. And again, and I've said it before, resistance is a resistance until unless broken. So if we fail here, then that is all this turns out to be is a bullish setup that failed to materialize. Um, and then we can go back down. And if we go back down, we're probably going to undercut these recent lows. And if I had to take a guess, I'd say we probably even undercut the February lows. So got to be careful, when you're trading right now. Just if you're not sure what to do, stand aside. And if you are long or short, just don't let your losses get out of control. Use stops. Keep smaller than usual position sizes, and that will allow you to trade this market because these are intraday price swings of 3+% in a lot of cases recently. And so if you're trading, whether it's QQQ or NQ or anything, and you're using a 1% stop, uh, you might as well just stand aside. Close your trade out because you're going to get stopped out in this daily gyration, this intraday noise if you don't know what you're doing. So, if you can accurately trade off these levels, short, go long on pullbacks to support, and then short when you hit resistance and trail stops down, that's okay as well. But that's for an active trader. And if you're an active trader, day trading, then I don't need to tell you all this stuff anyway. So swing traders just need to keep in mind this volatility for the time being is here, will not last forever. I expect the VIX to drop off soon. Whether this market takes one more leg down, probably be quick and painless, get over with quickly. Oh, well, maybe not so painless, depending on how you're positioned, but and then we'll continue to rally from there. Or we go on, which I think we will in the next remainder of this week going forward, and start to rally from here. And we'll probably see the VIX start to melt down a little bit and move back down. All right, this has been Randy Finney with Right Side of the Chart. I hope you guys enjoyed the video. And as always, if you like it, please give it a thumbs up on YouTube. All right, have a great trading day tomorrow.